Moving on, Reliance Infra has completed the sale of the Mumbai power business to Adani Transmission for 18,800 crore rupees. Priyanka Iyer caught up with Lalit Jalan, the CEO of Reliance Infra, who spoke about the company's plan to be debt-free by 2019. Let's listen in.
The strategic transformation that we undertook for Reliance Infrastructure 3 years back has culminated yesterday with the closing of our Mumbai power business. As announced and as our chairman mentioned yesterday, this is the largest deal in the power/stroke infrastructure sector. Our first phase debt reduction is 13,800 crores. So from a gross debt liabilities of 22,000 crores plus, we will be down to 7,500 crores. So which is a 65% reduction in one tranche itself, in the first tranche itself. The interest also reduces by 75% for the company. This makes the company the strongest company in the infrastructure power sector. Our debt equity at the closing of the transaction is at 0.3 to 1. If you look at the median debt equity of all the companies in this space, they are in the region of 4-5 to 1. So very, very strong balance sheet. If you look at the median debt equity of all the companies in this space, they are in the region of 4-5 to 1. So very, very strong balance sheet, ability to grow very fast. The directives that we had put, the board which had put the directives, was that we want to be asset light, we want to be debt free, we want to be high growth, we want to be high ROE. And I think we are well on way to achieve the objectives that we set for ourselves 3 years back.
Also, talking about the cash flow and as well as some cash benefits that will be coming to Reliance Infra, if you could give us details on that, which will not be going to Adani as per what we've understood yesterday.
Yeah, so essentially if you look at this balance debt that is left, 7,500 crores, we have multiple streams of cash flows coming from our arbitration and regulatory, which does not touch the operating cash flows of the company. So starting with, we have approved arbitrations of 6,000 crores. This is predominantly the Delhi Metro arbitration, the NHAI road arbitration, and the Goa power arbitration. We have won these arbitrations with the arbitration panels. We have won the challenge also in the single bench high court, and now they are at the last stage of the division bench. So this totaling to 6,000 crores, which will all flow to the company. The other part which you mentioned are the regulatory assets prior to closing. Right. So like the closing happened yesterday, so all the regulatory assets prior to closing flow to us as part of the deal. So that is the second tranche of the 18,800 crore transaction. This we expect approval shortly, and this entire money will flow to Reliance Infrastructure. So this is about 5,000 crores. This again we are very confident because the issues which are in appeal have already been judged favorably by the regulator in other similar cases. Then we have another 8,000 crores of arbitration which are at various levels of arbitration. So if you look at this bucket, that is 6,000 approved arbitration, 5,000 regulatory, and another 8,000 of arbitration in progress, we have 19,000 crores worth of portfolio, which we are very, very confident that in 2019 we'll be able to make it debt free and cash surplus.
So, lastly, the whole target that you have set for debt reduction and to be debt-free by end of 2019. So, if you could give us, is there any timeline for that you're looking in terms of, will there be any further asset monetization required to achieve that?
No, as I mentioned, the debt reduction that we are doing from the current 7,500 is purely from arbitration and regulatory. We have no asset sales on the block. So there are rumors that we want to sell the Delhi power or the roads business. There is nothing is on sale. We will continue with our portfolios of Delhi distribution, our roads business, our metro business, our ENC business, and these are all going to be double-digit growth plus verticals going forward.
Right. So debt equity ratio to fall to 0.3 times and to become debt free by next year. The stock is vaulting gains of over 1.5%. But let's quickly now pull up our Anil D